Okay, so we'll go ahead and get started in the interest of time. Good morning, everyone. My name is Colin Allen. I'm the Director of Communications here at the New York, New Jersey Council. Hopefully, I'm familiar to most of you. If not, it's a pleasure to meet you. I look forward to communicating with you all in the future. Welcome to today's session, hosted both by the Council and the Business Consortium Fund. And so I'll get out of the way by turning it over to Terrence Clark, President and CEO here at the Council. He'll make some remarks and then hand it over to the BCF team. Terry?
Good morning, everyone. Hope everybody's doing well on Groundhog Day. The council's been in existence, for all you that don't know, for 50 years. This is our 50th anniversary here in 2023. And, we've been involved in a number of things in helping people develop and grow their businesses. Our primary function is the growth and development of minority businesses. And a lot of that has been done through connections with our corporate members and looking for business opportunities for our certified or minority business clients. At this point in time, the council has just about 1,400 businesses that are certified through our council and more than 160 corporate members. So it's a wide variety of people that are our constituents. So it's, just a bit under 1,600 constituents that we deal with. But we always talk about, so what do you need to do to get new business, to connect with our clients, with our corporate members, connect with other clients? Because it's not just about dealing with our corporate members, it's also about learning about each other. And, over the course of this year, we will be having a number of events, programs, and the like geared toward bringing people together. We kind of all were a little separated for about 2.5 years or so during the COVID-19 pandemic. But we're going to be doing a few more things in person. But the other side of getting contracts is financing them. And there's a lot of money out here. Let's just start with that. What's affordable cuts down that lot of money to a very few programs and things that you as a business owner can take advantage of in the growth and development of your business. Because one thing that we've noticed, and I can tell you, we have a number of clients who get very excited when they get a contract until they get downstairs and read the fine print and find out how they got to finance the contract and what they're going to need to be able to do to develop that contract and do well on it. And our goal is for all of our clients that if they're looking for business opportunities, to not only get them, but to finance them. The Business Consortium Fund, which is a CDFI, Community Development Financial Institution, for people who don't know what a CDFI is, they provide various programs, financing programs that can be beneficial to the growth, development of your business. And, they've been basically partners through the NMSDC network since the late 80s. They're based primarily out of New York, but doesn't make a difference where they're based. What the difference is the programs that they have that can be beneficial to you as you're looking for financing and affordable financing. And I want to keep bringing up that word affordable because it's very important. I mean, there are all kind, like I said, there are all kind of financing opportunities. But what's affordable? What's something that you're going to be able to afford and help you grow your business versus getting something that you say, well, I got money, but the money costs more than what the profit margin is in my business. So this morning, you're going to hear from representatives from the Business Consortium Fund and one of our corporate members from JP Morgan Chase. JP Morgan Chase has been a longtime corporate member up through the NMSDC network. I know a variety of the folks that work there. And this morning, Nancy is going to talk about some of the programs that JP Morgan Chase has that can also be beneficial to you in the growth and development of your business. So I hope that the information that you get is helpful to you this morning. Pay attention, ask questions. And if, once again, as I always say, if there's anything that I can do that's going to be beneficial in the growth and development of your business, feel free to reach out to me or any of my colleagues at the council. So good morning, Nancy, and thank you for your participation. I'll let you present on things that JP Morgan is doing in the growth and development of minority businesses. Good morning.
Good morning, everybody. Terrence, thank you so much. I'm going to actually jump in very quickly before we turn it over to Nancy to say good morning. Hello to everybody. Thank you for being here. We're really excited to be in front of you today. BCF, like Terrence said, has been around for a long time, but you may be wondering where we've been lately. And lately, what we've been doing is recapitalizing our fund. We've been bringing more dollars into our CDFI to get more dollars out to you, the MBEs that we serve in the network. And New York, of course, is very special to us because New York is where we're based, although we are a national lender. We have a very experienced team. And not only that, but what sets us apart from other lenders is that we understand what needs to happen to finance a contract, because we've been so deep within the supplier diversity ecosystem for the entire life of BCF. And I do want to say that we 100% focus on financing businesses owned by people of color, and we're very proud to be able to do that. So thank you for having us today. A little bit about our team. Here's our senior staff. And you'll hear today from Ruben, our Chief Lending Officer, as well as Camelia, our Director of Small Business Lending. We're very excited also to have a new team member, Jobert Richards, who's joining us today as well. And we are growing to be able to serve you all better. So that is what we wake up every morning wanting to do. We do have a lot of wonderful partners, and what the partners help us with is connecting the dots, right? Understanding what the corporations are looking for from suppliers, from contractors, so that we can share that information with you. Our corporate partners are aware of our strategy, of our objectives, and they have the opportunity to help us form and help us direct those strategies and objectives. And I'm going to say this over and over again, back to you all, the MBEs that we serve. So we have about 12.5 million that we have ready to go out the door right now. And in the next few months, we should have another 15 million or so. And we're growing fast. So we're excited to serve you. And with that, I'm turning it over to Nancy. Nancy is here from our newest corporate partner. Although Chase has been part of the NMSDC network for a long time, we are very happy to welcome Chase as a corporate partner to BCF this year. So Nancy, welcome and thank you. And I'm going to turn it to you because, like Terrence said, it's all part of the puzzle. First, it's competing for and getting that new contract, and then where we come in is helping to finance it. So Nancy, thank you very much.
Thank you, Zara, and thank you, Terrence and team, and all of those business owners who are joining us this morning. You know, this is really about you, and so we want to dive right in and take a look at, you know, how we can facilitate opportunities. So with that, I'll just ask to go to the next slide, and I'll try to be brief. Because there's a lot of information here, but I want to hit the highlights and really make this, you know, compelling and informative for all of you. So hopefully all of you are aware that diversity, equity, and inclusion at JP Morgan Chase is important to us in our workforce, in our workplace, and what we call the marketplace, which is for us supplier diversity and our supply chain. And the good news is that supplier diversity at JP Morgan Chase lives in the supply chain. We report to the CPO. So I think that's really critical, really for any supplier diversity program, but particularly important for us because we are so large and we buy a lot of stuff, a lot of goods and services in a lot of different places. So it is a critical imperative for us. And we can go to the next slide. Thank you. A little bit about size and scope. You're probably, really familiar with the different brands, if you will, around, Chase Bank, around JP Morgan, investment, private bank, et cetera, et cetera. So, we're a large financial institution. With that, however, comes a lot of opportunity. And so we're going to talk about some of that. And our role, I think this is really important too, because it's important to understand what is supplier diversity's role in this. I mentioned we're part of the supply chain. So what we do and continue to strive to do more of is increase diversity, and I would suggest inclusion within our supply chain. Consequently, we create a supply chain that mirrors our customers, right? And with that, we drive economic growth in the communities in which we do business, which is really what this is all about, right? So we'll move on to the next slide, please. Thank you. And, how we create value. What is this really all about? What's the point? What's the what if or the so what? And it really is around providing opportunities and ways in which we can establish greater wealth in diverse communities. The other aspect to supplier diversity that I think sometimes gets lost is access to innovation. Diverse owned businesses like yours are key to, the next great thing, right? And access to innovation around a myriad of goods and services. And so that's really critical when we can bring that next best thing, right, to the firm. And a lot of times we find that through diverse owned businesses. And then, of course, we're always looking for, just like you are as MBEs, you're looking for that differentiator. So are we. What makes JP Morgan Chase different, right? What's that differentiator? What's that brand reputation that, is something that, brings value to both you as well as to us. And as you can see here, attracting and retaining not just tomorrow's employees, but even today. Why did I come to JP Morgan Chase? What are the values, right, that align to, again, much like a business owner, you want to align your business to organizations that have similar values as yours. So that's another role we play. So really important, I think, and you may be aware of this already, but in the fall of 2020, JP Morgan Chase committed an additional $30 billion over 5 years to help really shrink, if you will, or close the racial wealth gap. And so we're working towards that. And that's across the firm. That's in mortgage lending, that's in the business bank, that's, even in wealth management. It's amazing the different areas of the firm where, there are opportunities to do this. And it's ongoing, it's audited, it's an amazing, I don't even want to call it an initiative. It's just part of what we do, which is fabulous. Specifically to supplier diversity, we committed and spending an additional $750 million over those same 5 years with Black, Hispanic, and Latino owned businesses. Now, that's not to say that we don't do business with veteran owned businesses and Asian Americans and disabled and LGBT, et cetera. We do. Our focus, however, as indicated here, is in this space. And to do that, and I don't know if I have a slide, but that's okay. To do that, we've focused on 5 key cities because we're a small team. And in order to meet and exceed this commitment, which by the way, we are on track to exceed it, we really had to be laser focused. And so what we've aligned to are 5 key cities: Chicago, Dallas, Houston, New York, and LA. again, that's not to say that we don't buy from companies outside of those cities, because we do. We buy from Black, Hispanic, and Latino, and the other, what we call diverse stripes, really across the country. But again, just to really help us as a small team really focus and lean in, those are our 5 key cities, which is fabulous for those of you in New York. Now, here's probably the most critical slide that I can share with you, and the most important, and that is what we buy. Because you could have the greatest product or service, you know, known, right? But if we don't buy it, then we can talk with you about companies that we know who might buy it, right? And refer you accordingly. But for you to really understand, you know, what the opportunities are with JP Morgan Chase, this is it. So, you know, you can see on the left-hand side, sort of the, you know, high level sort of big ticket items. And then on the right hand side, we drill down a little bit more into some of the very specific areas. The other thing that we're doing that I think will be beneficial for MBEs in particular, and again, really for all of our diverse stripes, is we're taking that local lens that I talked about with those key cities, and we're trying to apply that really across all these categories of spend. So for example, global real estate, it's a huge area of spend for us. We know we're building a new headquarters in New York, right? So where can we break down some of that scope and some of those contracts so that others outside of the big CBREs and JLLs, you know, can participate in the construction of that building, just as an example. And we're doing the same really across those categories and subcategories. And we can go to the next slide. And then, you know, we're a financial institution. So of course we have certain minimum requirements. One being our diverse business certification. That's really important to us. It's, you know, sort of obvious in some regards in that it validates that indeed this business is who they say they are. But secondly, JP Morgan Chase is one of only 2 financial services banks in the $1 billion roundtable, and we're one of 32. So when you think about, you know, the Fortune 500, it's a pretty select group. It's annually audited, and it's driven by the spend that we have at a minimum, $1 billion, with certified diverse-owned businesses. So that tells us that, you know, it's really important to us, and we have some programs available for diverse businesses to become certified. But I just wanted to share that with you, that is important. Do we do business with diverse firms who are not certified? Yes. But again, it's an important priority for us. We also talk about the ability to serve JP Morgan Chase on a regional, national, even global basis. But again, I would tell you that we're also looking at, you know, we talk about scale sort of from the expansive side. We're always talking about scale like getting bigger. Well, we're sort of doing the inverse, and we're trying to scale down in some regards to opportunities. Of course, we'd love for you to have experience with other large corporations. But again, if you have experience with corporations who have certain other minimum requirements, then that's good. That's what we're looking for. Now, with that, of course, there are third-party oversight requirements, meaning things like your capabilities, your systems, your security, what I call your infrastructure, right? Can you invoice this timely? Those kind of somewhat basic things that you'll see there's some similarities, I think, relative to also, you know, talking to a firm about whether it's a CDFI or a bank like JP Morgan Chase. So a lot of those requirements will be similar, providing evidence and showing that, you know, you indeed are the business that you represent externally and that you have the capabilities to do this type of work. And we can go to the next slide, please. Thank you. Here's probably the second most important slide I can share with you. And so That's around the process. And it is laborious, it can be, and we know that. But again, we're a large supply chain. We're multifaceted in the things that we buy. And so we just want to share that I don't want to call it bureaucracy, but we'll be honest, it kind of is, right? So we know that it's important for you to register with us. And with that, we want you to be certified. And so, you know, right up front, that's a requirement. Again, we have different options and ways we can help businesses become certified, but that is part of that supplier registration process. Then within our supplier diversity team, we have business relationship managers who actually then do a second assessment. Once you've registered with us, they're going to take a look at your capabilities, your profile, if you will. They may set up a phone call with you to learn more. We also have a team of diverse sourcing category leaders. So remember those categories of spend that I showed? So within each of those categories, we have sourcing managers who I'm aligned to and work with weekly, if not daily, around diverse suppliers, right, who have come through our portal and who have aligned to, you know, what we buy. And then their job is basically to match what are the opportunities in the supply chain, what we call our sourcing categories, and who are the diverse businesses that can help us meet those opportunities. And then the next step is really meeting with the line of business. And by that, I mean the budget holder, the manager who has the project, or, you know, who has the contract, who has the work that needs to be done. And alongside of that will be that third-party oversight assessment, let's call it that, where we're going to talk about, you know, your cybersecurity readiness, your opportunity to invoice us, right, digitally, that type of thing. And then ultimately join the supply chain. Now, what I don't have on here really, and would be really critical to the next step, is around the contract. But that's yet a whole nother process. But I just wanted to give you sort of a high level overview of how all of this actually works. And we could go to the next slide. And then we do provide additional resources, as I've kind of alluded to, along the path, right? We've got Chase coaching opportunities. We've got opportunities around navigating the cash flow. We're working with CDFIs, as you are aware. So it's a great opportunity there. We have a diverse supplier grant initiative. And then there's a program that we provide through the Ascend organization that provides additional opportunities. And there's actually some additional ones. So there's lots of resources available. And I just urge you to take advantage of those, whether they're through Chase or, you know, any other, whether it's SBA, you know, whatever the resource might be. I just highly recommend to take advantage of those. And then I think maybe we have one more slide or two maybe. And then we talk about, again, just, it really all starts with registration. Get on our radar. Let us get to know who you are, what your capabilities are, what your company's all about. Is there an opportunity, you know, within the firm for us to do business? Maybe not today, maybe not tomorrow, but, you know, into the future. And I think, you know, Terry, you would agree that it really is all about relationships. So let's start there. Let's get that established. And then we can move forward, you know, based on the needs. Because remember, too, this is not a static scenario. It's very fluid. We can get an opportunity tomorrow in marketing, I'm just making that up, that we didn't have yesterday, right? So it's all about timing, it's relationships, but we're here to help you, you know, take advantage of that, including opportunities with the Business Consortium Fund. So let's go to the next slide. I think that actually might be it. one more. So this is the opportunity. So there are senior business consultants. They're in 21 cities, including, there are several in New York, actually, and I'm happy to share those. Would that be helpful to you? We can definitely do that. And their focus is solely on mentoring businesses. And whether you're a customer of the firm or not, it's not exclusive to anyone, actually. You just need to be, a business that needs a little assistance with some mentoring, and they're fully armed and prepared and ready to support you wherever you're at, right, in the continuum of your business development. So it's a great opportunity, I think, for all of you to leverage. And I think that is the last slide. And I think this was just around, what we kind of just talked about, right? And I think that's important. And this is a great list of really sort of a checkoff, if you will. Do you have succinct capabilities? Are you certified? What is the ownership status? Where do you serve both within an industry, but also within a geography? What's the makeup of your staff? That can be important too. Of course, risk mitigation is critical. Your own financial wellness, right? What I call the wellness of your company. And then, of course, we all have to adhere to regulatory compliance. So with that, Sarah, I'll turn it back to you. And I don't know if we want to save questions through the end, that's fine. But I think this will dovetail nicely into, the sort of the basics for potential borrowers.
Great. Nancy, thank you so much. That was really helpful. And Chase really walks the walk, talks the talk. So thank you for doing that. And we're very grateful for the resource. And with that, we're going to turn it over to the lending team, who's going to talk about when it makes sense to borrow. You may have a contract that you need to finance. Does it always make sense to take on debt for that contract? Maybe and maybe not. But overall, what we want to show is that a loan will be right for you if you can say three things. You know why you're borrowing. You can show how you're going to pay it back. And that the loan is going to position you for growth, right? We don't want your new source of capital to be something that keeps you up at night in a bad way. Maybe it keeps you up at night, doing more company growth, but we don't want it to add any anxiety or stress to your business. We want to reduce stress by providing additional capital. So I'm going to turn it over to Ruben Rodriguez, our Chief Lending Officer. He's been with BCF for a long time and is really, first of all, a very wonderful person to work with for all of our clients, and you will hear that across the board. And second, he is here to help, and he'll also be sharing the stage with, so to speak, with his other team members. So Ruben, I'll turn it to you.
Well, thank you, Sarah, and thank you all for joining us, and hope that you can get a lot of information from this session. And with regards to Nancy, I am an alum of Chase, JP Morgan Chase. I started my banking career at Chase, and I spent my first 16 years in banking at Chase, and I got into community development lending at Chase. So
fabulous. So just a little bit about this, right, Ruben?
Yeah, absolutely. And so Chase has a lot to do with why I'm here today. So I just wanted to point that out. Okay. Sarah had mentioned I've been here a long time. I've been here actually 10 years after a 25-year career in banking. And I definitely not looking back Not to disparage banking, but this is my calling. I like doing community development. I like working with MBEs. I like seeing businesses thrive. I like seeing businesses grow and be profitable. We have a lot of MBEs in our network. We have MBEs who are just startup, and we have MBEs are, I believe our largest MBE is about 5 billion in revenues. So, so we have a broad spectrum in terms of revenue sizes. So this is a great organization, and the fact that you're here, you already joined, you're in the New York, New Jersey Council, and I encourage you to go to all these events, because you're going to get a lot of it, a lot out of them. Like I said, like Sarah said, I'm joined here by Camila Lejeune. She's our Director of Small Business Lending. And at the end of the presentation, she's going to do a sample of how you go about applying for a loan with BCF. Sometimes, the process can be confusing, but we want to make the process easier for you. And actually, we're working on revamping our website in order to make the process of applying for a loan a lot easier. Right now, I find it's easy, but we're going to make it a lot easier. So what you see today may be a little bit different in about a month from now. Okay, Sarah had mentioned 3 things you have to look at when you think that the time may be right for a loan, right? The purpose of the loan. So what purpose could it be? Maybe you need to deploy a new contract that you just got from Chase, right? So now I have a contract. I have to deliver a whole bunch of furniture to all the branches at Chase, and I don't have any money. I don't have sufficient funds to do that. So I said, well, I'm going to need a loan to do that, because you may have to wait 30, 60, I don't know how many days before you start getting paid. And that's called working capital. Now, I just gave you an example of a type of working capital. Not all working capital is created equal. So we get a lot of requests for loans where they say, well, I need the loan for working capital. I say, okay, so can you expand on the working capital? Well, I just gave you an explanation on the expansion of the working capital. You need to deploy a new contract, need working capital to set up staffing, need, for expenses, get the contract up and running before I start collecting. So that's an example of working capital. So know exactly what your working capital is. Just don't use the word generically working capital. I may need to buy equipment. I may be acquiring a new business. I may need to buy inventory. So just have a purpose for the loan. Have a specific purpose for the loan and say, okay, now I know why I need the loan. Now I have to show how I'm going to pay it back, because the lender, either be the bank or BCF or any other financial institution, is going to want to know how we're going to get paid back, because the whole purpose of you borrowing is that you're going to pay it back, and we need to get paid back so we can deploy those funds to other MBEs. So, it's a cycle here. Okay, so you're going to look at your cash flow. You say, well, do I have sufficient cash flow to pay this loan back, to pay the loan plus interest? Do I have a primary source of income, right? Which is your business cash cycle. I'm collecting my accounts receivables, my day-to-day sales, things like that. You're looking at that. Does that generate sufficient cash? You also have a secondary source of repayment. Your secondary source could be you. Maybe I have outside income, or maybe I can allot 30% of the income that I have from my business to emergency capital in the event my cash flow runs a little bit dry, and so I can make my loan payment. So you have to really give it a lot of thought as to how you would pay that loan back. And the first person you're actually going to speak with when you think about that is your accountant. Speak with your accountant. Say, listen, I'm thinking of taking a loan because I just signed a new contract with Chase, and I need to pay, and I need to make sure that I have sufficient cash flow to pay the loan back. So ask your accountant first. That's your first line of defense. Your accountant is the first one that's going to look and is going to say, well, it looks like you have sufficient or you don't have sufficient. And that's where you kind of, your brain starts working and saying, well, you know, how much really am I going to need? And is this going to be sufficient? And so you kind of start thinking about it, but you're putting a lot of work into it. And will this loan create new growth opportunities? So is this going to help your business grow? Is it going to increase the profits of your business? So you really got to put a lot of thought into that. You can't, you know, you have a lot of, you know, in my banking career, I've had a lot of people come to me and say, I need a loan. I say, okay, what do you need it for? Well, I need it for working capital. Okay, so what's the purpose of it? Oh, I don't know. How much do you need? Well, you're a banker. You could tell me how much. So, you know, the business owner is not prepared. And I think, you know, I really respect more, and a banker respect more a business owner who is prepared. They come in prepared, they come in organized, makes this process a lot simpler for all of us. And you don't get frustrated, we don't get frustrated, it just makes the process better for everyone. Next slide. Preparing to be debt ready. So now that you know that you need a loan, okay, you're gonna have to figure out how much you need. So remember I mentioned your accountant, that's the first person you go to. Go to your accountant and say, I need a loan for this purpose. We need to figure out how much we're going to need. So you're both going to put your heads together and kind of figure out a preliminary plan as to what amounts you're going to need. And you're going to, after you do that, you're going to go to a lender who's aligned with your purpose. Not all lenders are created equal. Not all lenders specialize in every type of financing. So really, you know, I can give you an example, a personal example. I worked for 3 different commercial banks in my career. I worked for Chase, 16 years, Bank of America, a little bit short of 8 years, and about 2 years or so with Hudson Valley Bank, which is now Sterling National Bank. And I will tell you, my last tour of banking with Hudson Valley Bank, I was hired because they had acquired a minority-owned bank in the Bronx, and I was hired to transition the loan portfolio. A lot of the loan portfolio was in textiles, it was factories, it was service businesses, retail shops, things like that. That was the loan portfolio. That was really the client portfolio for the bank that was acquired. Hudson Valley Bank just catered 90% of their clients were just attorneys. So now they really didn't specialize in lending to other sectors other than attorneys. So when I transitioned a portfolio and one of the clients from at the bank was actually called New York National, when one of the clients from New York National requested a loan, we had challenges in processing the loan because of their expertise was in lending to attorneys, not to retail shops or factories or anything like that. So it was a challenge. So align yourself with a bank or lender that really is aligned with your purpose and what you do. BCF, we have experience with a long line of businesses. We do a lot of business in the service sector, in the industrial sector, in the professional sector. So we have a lot of experience with that. We've been around since 1987. So, and we've seen some of our MBEs grow. And in fact, one of our first borrowers is our largest MBE right now. ROI Technologies is our largest MBE in the network, and David Stewart was one of the first borrowers. He came to BCF and says, I need some help. So this works. Okay, so you found the lender, you met with the lender. So you went to BCF's website, we hope, and you set up a meeting with one of our persons of our lending team. We kind of went over what you're looking for, how much you need, and we kind of discuss a basic structure of the loan, and then you're kind of getting ready to apply. Well, before you even do that, you have to gather all your tax and financial documents. Make sure they're up to date. Make sure that if you're borrowing, let's say right now, right in January, it's actually February 2nd. Sorry, this year is going by fast. If you're borrowing now on February 2nd, make sure your accountant prepares financial statements for year ending 2022. Okay, so you're not going to have tax returns at this time, but you can get financial statements prepared by your CPA. It's important because no bank, no lender is not going to consider any lending until they see what you've done recently. So if you come in and you give them 2019, 2020, and 2021 tax returns, corporate tax returns, it's going to show a nice picture. It's going to show nice trends. But what happened in 2022? So make sure that you include 22. And when you go down later on in the years, let's say you're applying in June, make sure you provide interim financial statements year to date 2023. So make sure you gather all your financial documents, and make sure that they're in order, and review them with your accountant before you come to the bank. Keep in mind that you're entitled to one free annual credit report by all three reporting agencies. This has been around. This program is great. It's been around for many years. I use it every year. I look at my credit report from all three major agencies. I pull it up every year, and it's free. Now, if you want to get your credit score, they charge you like a minor fee, but you can actually get your credit score, and I actually encourage it because the first thing that we look at in a lot of the lenders is what is so we have like a minimum credit score. So if you're applying for all of our loans except for our smallest micro loan up to $15,000, we ask for a minimum credit score of 650 or higher. If you're applying for a $15,000 loan, then then you can have a credit score of 620 or higher. Okay, but anything above $15,000, then we would want at least a credit score of 650. If you do not have a credit score of 650, then you really need to look at your credit report and put together an explanation for the lender before the lender asks you, because what you got to do is you're saving time. The purpose of you going to the bank, to the lender to apply is that you want to do this efficiently, quickly, because you need the funds. And if you're not prepared, so now you have, and I'm talking about the personal credit report, because all our loans and just about 95% of all lenders ask for a personal guarantee on all loans. So because we ask for a personal guarantee from all owners of the business of 10% or more, then we're going to pull the credit report from each owner. If it's a spouse, if it's husband and wife, then we can pull a joint report as well. Okay. Be prepared to explain any prior or current bankruptcies, tax liens, judgments, and unresolved litigation. Put it down on paper. If you have a prior tax lien and you're still paying off a tax lien from before, be prepared. Put the explanation as to how you got into that issue and how you resolved it, and what is your resolution now? Are you on a payment plan and things like that? If you had a bankruptcy of that was more than 5 years ago, be prepared with all the documentation. Be prepared to provide the discharge documents, and just provide an explanation as to how you got there and what's your plan going forward to not let that situation happen again. Okay, and one thing that's not on this list is actually you can also share positive things with the bank. If you did something positive happened in your business, banker likes to hear that too. So, if you had a really beautiful event, just something that really was impactful, share that with the banker, because we want to hear that too. Absolutely. So it's not all negative, and it's not all just straight business. It's got to be, share your positive thoughts as well. So we want to know about the negative things, but we want to know about the positive things as well. What lenders look for. So we look at income statement, balance sheet, management experience, credit history, and collateral. In the income statement, we look at the cash flow. We look at the business cash flow, revenue trends. Do the revenues trend up and down? So are the revenues trending downwards? So let's say you had revenues of 2 million in 2019, then we know everyone had a bad 2020, but let's say it went down to 1 million, and then in 2021 it went down to 750, and then in 2022 it went down to 600,000. The trend is going negative. So we want to know why your revenues are going down. So if it's going up, we want to know that too. Okay, it's trending positive. What have you been doing? You've been signing a lot of contracts. So positive and negative, we want to see what the trends are.
And
are
Ruben,
you being profitable?
I'm sorry to just interject, but if your trends are going down, that doesn't mean that we're going to say no. It just means we need to understand why and whether a loan will help it go in the other direction or not help it.
Absolutely. Thank you, Sarah. Absolutely. Balance sheet. This is one of the overlooked aspects of your business financials that a lot of borrowers don't understand it, and a lot of borrowers overlook it because it's just numbers, and it's and really what you're looking at the end of the day is that how much am I earning and how much am I profiting, right? But your balance sheet is really the financial condition of your company. It's what you own, what you owe, and what's the equity that you invested into the business. One of the major reasons that you go to a bank and they decline you, but you have a lot of profits, you're trending forward, you have good cash flow, but you're saying, I got declined by the bank. Why? Well, the banks are regulated by government entities. So they have to adhere to certain regulations. And the analysis of a business balance sheet is part of the regulations that the bank have to adhere to. So if they look at your balance sheet and you have negative net worth or negative equity, which means that everything was taken out, you're taking out stuff from the business, and you've taken out more, that your equity is negative and your debts are high and your assets are lower, then the bank may not approve you for a loan because your equity position or your balance sheet is very weak. So we help you here at BCF. We're not going to decline you for a negative balance sheet, but we expect you to fix that, to make the balance sheet healthier. So if we do approve you for a loan, we'll set up a plan to make your balance sheet. So let's say you have a negative net worth on your balance sheet. We'll set up a plan. So you have negative equity at the end of 2022. By the end of 2023, you're going to have equity of X. It could be, let's say, positive equity of $10,000. Then, by the end of 2024, you're going to have X equity, and then by the end of 2025, you're going to have X equity, which is going to result in your leverage of 3.5. And I'm not going to get into leverage or anything like that, but it's just a measure. It's a financial condition measure that the banks use. So, and we'll do a lot of hands-on, one-on-one, and explain to you how to get your balance sheet healthier, and we'll put it in place, and we'll make it part of the covenants of your loan to make it healthier. And it's for your own good and for the future, because we expect that your business is going to grow so much that your lending needs are going to be so high that we wouldn't be able to help you. So you're going to have to go to Chase And Chase is going to, and Chase is going to look and say, wow, you look great. We can probably give you this $10 million line. So, this just balance sheet, I spent some time on it. It's important. So don't overlook it. We look at management experience. What's the experience of the owners, key employees? What problems and solutions have you encountered over time? And we just kind of look at the overall, your ability to manage this type of business. We'll look at your resume. We'll look at resumes of key employees. We're just going to probe around and just kind of get a background as to, what qualifies you to take this business to the next level. So that's part of the analysis process. I mentioned credit history, very, very important. If you have derogatories on your credit report, so you already went to annualcreditreport.com and you saw derogatories there, you've already put together a memo indicating what those derogatories were and why did it happen and what are you going to do in the future to prevent it from happening again. That's very important because the bank is going to ask you that. The lender is going to ask you that. So, just to prevent from the process of slowing down, now the lender is saying, well, you've got a lot of, you've got collection items on your credit report. You got this, you got tax liens. There's a lot of things that can show up on your credit report that you need to be able to explain to the borrower. So put it on paper, have it ready and make it part of your submission package before, so when you apply, you'll have a complete package. Anticipate what the borrower is gonna ask. If you have a unusual expense, a one-time expense, so maybe you bought something that you only need to buy one time. You bought a piece of equipment, or you had an unusual event. Maybe you had a small fire in your warehouse. So you kind of had to redo your warehouse and things like that, or you had to buy some inventory that you had, that was only going to happen, that particular inventory, that type of inventory. It's going to happen one time, you're going to turn a profit and that's it. So there's certain things that are one-time events that are not going to happen in the future. Please outline that and bring it to our attention, because when we do the cash flow projections, we'll take that into consideration in considering you in your ability to repay the loan. Collateral, we call that borrower's skin into the game. That's important. We need to be collateralized somehow. All lenders need to have some kind of collateral. We're not just going to lend you money and say, well, we hope that you do well. And if you don't do well, how we're going to get repaid? How we're going to get our money back? Do we need to liquidate the assets? Do we need to collect on the accounts receivables? We have a car that we have a motor vehicle lien on. Well, we have to repossess that vehicle. We never want to do that. And we always look for ways to make this thing work. So collateral is important. So if your business is short on collateral, do I have personal collateral that I can offer as to make this deal stronger and to entice us to be able to do the loan? So keep that in mind. And primarily most borrowers is real equity on their personal real estate is really the primary collateral that they have. Sometimes they have stocks that that they can margin and we can take, we can do that. But generally, I would say 90% of the outside collateral that comes in, it's generally from the equity of the borrower's primary residence or investment property or any other type of property. And it's the easiest collateral. We can assign that collateral. We can perfect that collateral in a mortgage. So it's the easiest route for you to be able to qualify for a loan if there is a collateral shortfall. We first look at the business collateral. Yes.
If I could just jump in here quickly.
Sure.
We are a nonprofit lender. We do what we do. We don't have shareholders, but we do have capital providers that provide us money that we then lend to borrowers. And that's why getting repaid is so important for us. Getting repaid means we can continue to lend and continue to deliver on our mission. And that's why the collateral piece is really important. We need to do what we say we're going to do for our capital partners, and we need a partnership with our clients, knowing that we will be repaid. And sometimes things don't go the way we want them to. We try not to seize, like Ruben was saying, not to seize on collateral. We don't want to ever see, we want you to keep your collateral. But if it's necessary, then it's something that a road we would have to go down. But we do try to avoid it.
Yeah. And me as a banker, I mean, it's very rare that even when I worked with Chase, and I worked with Bank of America, when I worked with Hudson Valley Bank, we never really, you know, I could probably a handful of times where we had to seize collateral, because generally if we work together, we figure out a plan, we're able to get through it. So there's always a way to get through it, but we have it there, and if we need to move on it, there's always that option. Next slide. Okay. Actually, before I go through the BCF loan process, can you go to the next slide? Okay, these are the BCF loan products, and you will see it on our website, and you'll see it on the next slide when we go back to it. But we offer microloans from $5,000 to $100,000. Now we still have monies. We have a special program for IT purposes. That you can borrow up to $15,000 for IT needs at 3% APR for 3 years. Okay, that's a payment of about $436 a month, principal and interest for 3 years. So we still have monies available for that. So if you're interested and if you have any IT needs, it's a quick process. We can turn that around in probably 2 to 3 weeks, and it's under our microloan program, and you require at least 2 years tax returns and personal guarantee, and the process is a little bit smoother. It's a lot quicker. So I encourage you to apply if you have any IT needs coming up, and the money once the money's run out. Then the 3% goes away. Then we go to market rate. As you all know, that just to give you some context, rates went up by 0.25% yesterday. We have decided, we met yesterday, and we have met over the last 6 months of rate increases, and we have not increased our rates. So we are holding on our rates. We want to be fair to you. We want to give you the opportunity to be able to borrow at a reasonable rates. So just wanted to point that out to you. We offer term loans from $100,000 to $1.125 million. And these loans could be for various purposes. And, it could be up to 5 years. We may be able to go up to 7 years on a case-by-case basis, but it's generally 5 years. It's a full underwriting, so there is a full package that's required. You're going to have to present financial statements. You're going to have to present tax returns, business and personal. For all loans, we require business and personal tax returns. And we're going to look at your accounts receivable aging schedules. We're going to look at your bank statements. We're going to do a full underwriting just to get a good picture of your business, see your trends, and see your ability to repay and understand your financial condition. So we're going to go through a process, just the same as with lines of credit. We offer lines of credit from 100 to 1.125 million as well, and those lines of credit could be a revolving line of credit, but the one that we use the most here is an asset-based line of credit, and we call it internally the borrowing-based line of credit, and it's really based on your accounts receivables. So we use a formula of about 80. We look at either 80%, 90%, 75%. We determine the percentage based on the quality of your accounts receivables. And then we let you draw up to whatever that percentage could be. Let's just say, for example, 80% of those accounts receivables minus those receivables under 90 days. And as a borrowing-based formula, and it goes through that. So that maintains a collateral coverage for us, and it affords you the ability to borrow on those receivables and pay them back, and then kind of keep revolving that line back and forth. So that's a good product. That's a good product, especially if you have some really nice contracts. It's same thing that I mentioned, accounts receivable financing. It's just the same thing. I just basically just told you that's part of one of the lines of credit. We have purchase order financing, so we can finance specific purchase orders. Just for example, just to kind of give you an example of one that we did a couple of years ago, business in the aviation industry, and they had a purchase order from Boeing, and it was to provide certain parts from an aircraft. And the parts were supposed to, I remember it's like 44 parts, but they were delivered in stages. So we advanced 80% of that purchase order. And we had a payment plan through those 6 months, and it worked to a T. They delivered it, then and the payment actually came to us. We took we kind of put the repayments, we spread it out over 6 months. We took our agreed upon payments and we wired the funds back to the borrower, and it happened well. So we can do purchase order financing. So keep that in mind if you have some purchase orders that you need to finance and deploy. We do factoring. We don't do it directly, though we are looking at a product or maybe a hybrid product that we can put together, and we're working on that. So that's more to come on that. That may happen later on in the year. But we do have a factoring partner right now that we can partner with them, and we could help either blend the rate or you'll get a discount on the factoring fees. We offer equipment financing, and that's really part of the term loan package. Okay, and then last but not least, we own a small business and investment company named Triad Investments LP, in which we can provide equity capital, subordinated debt, mezzanine debt, and in a combination of both, a hybrid or debt to equity. It's a more of a complicated product, so we can talk with you one-on-one, and we can determine if you need that type of financing. It's really geared toward mature businesses who are in a regrowth stage or looking to expand. So that's also a possibility. So more to come on that. And like I said, that's one thing that we could probably take a whole hour to talk about. So we don't want to get into that. So can you go back, Sarah? Okay. Last but not least, we're going to go over the loan process. I'm just going to verbalize it now. And Camelia, I'm not sure if Camelia has the ability to share the screen, but if not, somebody could just give her access to it as I'm working through this. But generally, the loan process, and as I mentioned before, we're revamping it to make it a lot more user friendly. So what Camelia is going to show you now, I believe, is user friendly, but probably a month from now is even going to be friendlier. Okay, so you go to bcfcapital.com, go to our website, and you're going to, when you click on the loan section on the upper ribbon, you're going to get a pre-qualification questionnaire. And it's just a couple of questions that kind of pre-qualifies you in that. And then it brings you to our application, which takes about 15 minutes to complete. Now, there is a step in between. So when you go to our application, you may get asked the same pre-qualification questions. And we're really going to consolidate that into the first set of pre-qualification questions on our website, and which then will bring you directly to our questionnaire. And that's going to happen in the future. So very important, when you complete the application, two things are going to happen. First thing is you got to get a pop-up. So if your pop-ups are blocked, you're not going to get that pop-up. That pop-up is going to tell you to sign into our loan portal. And so when you click on that link to our loan portal, it's going to ask you to register for the loan portal using your email address, and you're going to set up a password initially. That particular link is important. That pop-up is important because it provides you that initial link to set up the portal. In the event the pop-up doesn't happen, you're going to get an automatic email. The email is going to say Business Consortium Fund, but it does kind of like part of the address is going to say ABS Network, and that's our provider. So that may throw you off. So just you see any combination of BCF, Business Consortium Fund, and ABS Network, that's coming from us. That automatic email actually sends you the personal financial statement that you need to complete. And it also provides you a list of the checklist of all the items that you need to gather to be able to upload into the loan portal. And once you sign in, you set it up, you're going to be able to upload anything that we request. And there's going to be a set already of documents that need to be uploaded. And if we need any more specific documents, we'll actually put it in there and you're able to upload it in there. And in the event that you don't find an upload slot for a certain document that you want us to see, then just put it into miscellaneous. We can still see it. Okay. And we're having a lot of issues with borrowers who are using Mac computers. For whatever reason, the Mac computers keep crashing when you go into our borrower portal. So there's some disconnect as to your ability to apply. So try not to use a Mac. But I've had some clients who actually got through with it with the Mac, but most of our Mac clients have had some issues. So try not to use a Mac if you're applying for a loan. In borrower's view, you can actually send us instant messages. You also see documents required in which you can upload documents, as I mentioned before. Now, Camelia, I'll introduce Camelia, our Director of Small Business Lending. Camelia is wonderful to work with. She understands the whole loan process. She's just a wealth of information. So without further ado, Camelia.
Thanks, Ruben. Can you see my screen?
Yes. Yes.
Okay, perfect. So just a quick walkthrough of the process so you all can get a visual. So when you go to our website, bcfcapital.com, you'll click on loans. We're doing a little bit of a website refresh, so it'll be more apparent probably in the next month or so. But for now, you'll just click on loans, and this is the pre-qualification that Ruben was just speaking about. So you'll enter in your general information, and then whether or not you've had any bankruptcies or judgments, tax liens, etc. I'll make a note here, as I know Ruben mentioned it earlier. If you are looking for a loan $15,000 or under, if you do select that you've had a bankruptcy or a judgment or something like that, and you hit yes, it will tell you you don't qualify. If you have, resolutions, you have your plans in place, reach out to us and we'll see if we're able to help you. Similarly, if you're applying for anything over that $15,000 threshold, again, keep written documentation and reach out to us directly so we can see if we're able to help you with that. We're adding just a couple extra questions, really basic, like how long you've been in business, what amount of funding you're looking for, and then just high level where your net operating income is for the year, like below zero, between 0 and 100,000, or over 100,000. That'll just help us tailor this a little bit more. So once you fill this out, you'll get an email. Currently, it'll be from the desk of Sarah, and we'll be kind of adjusting that so it comes from the lending team. But it'll give you some basic information. And here you'll also get like a link to the personal financial statement as well, and then just a document list depending on the loan amount you're looking for that will kind of give you the time to prepare all of those documents ahead of time. And the link for the application will be here. So when you click on that, like Ruben said, it'll take you through a few of the pre-qualification questions right now. That's going to change in the coming weeks. And then this is the actual loan application. So general information on the business, just a clarity around ownership, how many people own the business, the percentage breakdown of that. And that'll help us with the guarantor, understanding like the guarantors and any other business that you have, and then high level financial operations of your business, and a breakout of what you're looking to utilize the funding for. So once you're finished with this, like Ruben said, you'll get a pop-up and it'll take you here. This is to access our loan portal. I'm assuming if you're going through this for the first time, you don't have access. So just click here to register, to put in your email and your password. And then when you register, you'll be able to see your loan application, as well as a section for like documentation uploads, and if you wanted to send any messages and to kind of track where your application is in the process. So that's just a high level overview of what that looks like for everyone.
Camelia, can you go back to the application?
Yeah.
Just want to highlight something. Okay, scroll up to the owner section. Okay, if it's the section is set up for 2 owners, if there's an additional owners, you see that blue box, a lot of people leave that out. You click on it and it will open up an additional spot in the bottom for an additional owner. So if you have 3, 4, 5, you can just keep clicking on it. And that's the same for business debt. So if you have, we set up a line for 3, but you can add 4, 5, whatever. Okay, and even with corporate members. So if you want to talk about corporate members, you can click on add additional corporate members. Okay. Okay, and I think that's it, right?
Yep.
Okay.
Back to you and Sarah.
I'll turn it over to Sarah, and thank you, everyone.
Great. Thank you so much, everybody. So this has been quite a lot of information, and from how to get a contract, what to look at internally in your own business, to what to look at internally in your business as you seek capital. And I think we have some time for questions. And Nancy, I'm very glad to see you're able to stay here in case there are questions from the audience. So we welcome any questions we have, and also we're available. We're available, by email. If you have a question or want to set up time to talk to any of us, we welcome that as well. That goes beyond the remaining 14 minutes we have here today. So people who want to ask a question can unmute and ask away.
Hello, I'm James Fake.
Hello.
Hey, how you doing?
Great. How are you?
Right. I just have a question. Is there anything or tailored to like startups?
We don't generally do startup businesses. We require that you be in business for 3 years, 3 contiguous years. Now, if you are applying for a loan up to $15,000, you can be in business 2 years plus. But generally, we refer startup businesses to their local small business development center. They do a great job, and they provide the service for free for you from the federal, and they're funded by the federal government, the small business development centers. Where are you located, James?
Oh, I'm in Syracuse, New York. I've been
In Syracuse. Okay.
Yeah.
University of Syracuse has an SBDC, by the way.
I was mainly asking as general, like for other businesses, or I know some that are starting or thinking about it. So I just wanted to see if there's anything for startups.
Right. Now, don't confuse startups with a acquisition. Sometimes, like, you have an existing business, but you want to get into a new line of business. So maybe you are, let's say, you have a retail business. I'm just kind of you have a wholesale business, but you want to open up a retail portion of it. And that's going to be a separate business. Maybe your current business, we can be able to look at your current business and look at it as an expansion of your current business. So we can look at it from that point of view. But if it's a pure startup, we would ask you to first, go somewhere and seek some help and to get the right direction. And then we could definitely work with you once you're 2 years in.
Oh, okay. Okay. All right. Thank you.
Hello.
Hi.
Hi. Hi. How are you, Ruben? This is Luke. So I listened to you before. You said that you guys aren't raising your interest rates, but what are the current rates for you guys right now?
Our rates are somewhere between 8 and 10%. So that's kind of like the range between 8 and 10% APR.
Okay.
It could, it's risk based. So, if the risk is higher, we'll go higher rate. If it's less of a risk, we'll go the lower end of it.
All right. Thank you.
Hey, how you doing? This is James again.
Hi, James.
Okay, so what if your personal credit, where you say you go off your personal credit, what if that is not quite at what it needs to be? Is it like y'all will work with the client, and as they get their credit together, maybe they just got a few discrepancies they need to take care of, and then it'll regulate better? Is that something?
That is something. Now, one of the things that we, with our microloan program, especially for the smaller loans. So let's say you're applying for a loan to upgrade your IT for $15,000. If your credit score is below 620, we would allow you to have a co-borrower come on board, and so that a co-borrower who's going to have a credit score above 620, of course. And that will help, enhance the credit and allow you to get approved. But on higher loan amounts, we'll look at what the situation will work with you. If the cash flow works, if the collateral works, and there's issue with the credit, we need to get to the bottom of why it happened. Why do you have, a credit history that's derogatory? Why it happened, and how can we prevent it from happening in the future? So we just need to get to the bottom of it. So we definitely will work with you. Now, if you don't have good credit and the cash flow doesn't work, then other things, then it'll be a little much more difficult. But we'll definitely work with you, even requesting additional guarantors on the deal.
Oh, okay. So okay.
No more questions? I guess not.
Nancy, after hearing everything that BCF presented, are there any further comments that you have or you wanted to add?
Thank you for that. No, I just know there's a lot of great information here. So I just advise folks to, really consider what's been presented and really, I think, really consider what works best for you in the current phase or stage, if you will, of your business, right? So and I think that's really, Ruben, what you were talking about is depending on where you're at, right? There's sort of a continuum in the development of a business. So kind of depending on where you're at, you have products that might be appropriate, but it just depends on where the business is at any given time. And I would suggest the same would be true when considering for opportunities with JP Morgan Chase. There's no like set, perfect match, so to speak. It's really an evolution. But the point is really to consider that, right? Because if you don't at least consider it, then you really won't ever know. So I think that's been very beneficial. So thank you for sharing that this morning.
That's really great advice. I saw Jacqueline Smith raised her hand. Do you still have a question?
You're probably on mute, John.
Maybe not. Yeah.
Now I saw the hand too, so maybe she's on mute. Guess not.
Well, thank you everybody for being here, for being a great audience. And Terrence, if you have any closing remarks, we can turn it to you. And thank you.
Thank you, Sarah. First and foremost, I want to thank Sarah and her colleagues and Nancy for the information they provided this morning, because finance is several things. Number one, it's a very personal request, so it's not something that many people feel comfortable having open conversations about for a variety of reasons. That's the first thing. And the second thing is, there's a granular focus, especially through the NMSCC network, as it relates to contracts and business opportunities. Well, this is the other side of a business opportunity. What happens if you're fortunate enough to get one? What do you need to do to be able to finance it so that you can continue to work that business opportunity and hopefully lead to other business opportunities? And so, the information this morning that you received from the Business Consortium Fund certainly gives you an option when you're looking at finance that may not be currently available to you, depending on what your business situation is and what your banking situation is. On the other hand, you also learned information, from one of our long-term corporate members, JP Morgan Chase, as to the different things and programs that they have that are available that can be beneficial to you, not only from a financial standpoint, but also from a business opportunity or contract standpoint. As many of you know, what we try to do is get people in the position where we are what we call procurement ready. And procurement ready basically is when you have a solid management structure, a solid marketing plan, and you're able to take advantage of opportunities in the market that you've identified, and that your finances are proper and correct. What I call the 3 M's: management, marketing, money. And so we're hoping that all of you work toward getting to that point, because getting to that point is going to allow you to deal with people like at the Business Consortium Fund for a financing standpoint, and look at opportunities that come up as with our corporate members from JP Morgan Chase and others. But you can't get there until those 3 things are in shape. And Ruben talked to you about the different things that you're going to need to know to be able to put yourself in a position to get financing from his organization. Take this stuff very seriously, folks. People don't gift anybody anything. You have to be in a position where you have the type of paperwork they're talking about, or running the type of business that can attract finance and also contract opportunities. So that any way we could be of assistance to you doing that, please let us know. You got the resources, you got the information, you know now how to get in contact with the Business Consortium Fund and the Supplier Diversity Program for JP Morgan Chase. Ladies and gentlemen, it's incumbent upon you to take advantage of it. I hope that this was helpful. Everybody have a great afternoon. Once again, I want to thank my colleagues for the information they provided today. And, as we move forward into the year, there'll be more opportunities for you to learn more about the opportunities from JP Morgan Chase and the financing opportunities from the Business Consortium Fund. Everybody have a wonderful afternoon, and we'll speak again soon. Take care.
Thank you.
Thanks, everybody.
Thank you.
Goodbye.